many places to buy Bitcoin. They collect your personal information and jeopardize your privacy. KYC is the illicit activity. BISC is open source. It does not collect user data. You keep your private keys, create or take offers to trade peer-to-peer, and keep your Bitcoin private and secure.
Tomorrow, and the only thing I had was Japanese whiskey. So
hey, that's great.
That's high class.
Austin approves of that, right?
That's what we're drinking for happy hour.
Word. Are you drinking out of the paper cup?
Yeah, you know, you gotta keep it real on one side, and keep it classy on the other side.
A balance.
Nice balance. Yeah, exactly.
Very cool. All right, guys. Well, we are live. This is Drinks in Quarantine. We have a mining roundup today. We like to check in with some of the best miners in the industry every once in a while to get the scoop on what's happening with hashrate. Such a fundamental part about Bitcoin, and it's always good to hear about how things are kind of moving along. I am CK. My job is to make sure everyone move the conversation along and make sure the drinks are flowing as well. I'll hand it off to Brand, who's my co-host, also at Bitcoin Magazine.
Yeah, hey guys, I'm Brand BTC, aka Brandon. I am here to also help facilitate conversation and throw in really, really good hot takes and jokes. But yeah, so excited to have everyone here today. So excited for everyone who's tuning in. And CK, you wanna jump into intros?
Sure. Let's start with the person on my right. I don't know if he's on the right for everyone, but Austin, why don't you introduce yourself and tell the audience, what you do in the mining space?
Yeah, so Austin Storms at AU Storms on Twitter. I started one of the first containerized, mining companies. And now I work for GAM, Great American Mining. I don't officially have a title, I guess. I just make things work.
Kind of happens a lot in this space, huh?
Yeah, right. And so I do all the electrical distribution. I write all the software for that. And then I also write all of our kind of container management stuff. So that's me.
Cool. Let's jump over to Chase. Crusoe is kind of in a similar sphere as GAM. Why don't you introduce yourself and your company?
Yeah, I'm Chase Lochmiller. I'm the CEO and founder of Crusoe Energy. We utilize otherwise wasted natural gas that gets flared at the wellhead, and we use it to power mobile modular data centers for, amongst other things, Bitcoin mining. We sort of built a lot of solutions in house with our own custom software management tools and mining pool related stuff. So yeah, that's kind of what I do.
Awesome. Let's jump over to Cassie, former colleague. Great to chat. And I think this is the first time we've talked in a while, but nice to have you.
Yeah, we played phone tag there for a minute, and then I think we were both just kept going back and forth.
Yeah.
So Christian, Brandon, and I worked together previously at Bitcoin Magazine. I was in operations there. And now I'm working sort of in the back office and front office. It's a good mix of both at a small Bitcoin hedge fund. So based in Nashville as well.
While Cassie was at Bitcoin Magazine, she was like our in-house mining expert. She did a Bitcoin podcast, What's Happening. So yeah, glad to have you on the show. Glad for you to bring your mining insights too. Let's jump over to Harry. Welcome back to Drinks in Quarantine.
Thanks for having me, CK. Harry Sudock, Director of Strategy for Grid Infrastructure. We mine Bitcoin in America, and we're super fired up. I think the last time we talked, we were kind of in that little bit of pre-halving, a little bit of fear. We're well through it now, and the road ahead is just so exciting.
I'm excited to hear that. I'm excited to talk to miners for the first time after the halving. Let's jump over to Nick. Welcome back. Not the first person from Luxor to come to the show, but first time to have you on. Why don't you tell the audience about yourself?
Yeah, thanks. I'm CEO of Luxor Technology. We also do hashrate index, which is like measuring the value of hashrate over time. Been in the space for a couple of years now. We started Luxor in 2017 and have just been trying to produce high quality content, good mining pools, and bring products to the mining space, similar to everybody else on the panel. Just trying to serve, we're solely focused on American miners and really trying to expand the presence of American mining pool. So thanks for having me on.
Let's go. I don't know if it's possible to be bullish enough on American mining. I feel like we should have called this American Mining Panel, because that's really what this is a lot of folks here in the Northwest or in North America really driving hash power up. So I'm super excited. Before we get into our topics, we have some rules. So this Drinks in Quarantine. If you want to drink, you can drink, and it's highly encouraged. But there's some rules too. The rules are, if you say Bitcoin or the word drink, that is a drink. And then we have a no shilling altcoins rule as well. So no shilling altcoins, please. So if you shill altcoins, you say the word drink, you say the word Bitcoin specifically, you have to drink. And the rules are made to be broken, and they're made to make everyone drink. So
can we get a definition of shill? Can we get a definition of shilling?
You can talk about it, but you cannot encourage or suggest that someone be bullish on it.
Can we talk about some technical aspect of a different chain?
Maybe, but you probably have to drink, which is great. I mean, that's the point, right?
All right, I'll let you guys decide that. We know quite a bit about some of the other coins that are going on in the space. Obviously Bitcoin is king. They call it Big Daddy Bitcoin for a reason. But there's a lot of coins doing a lot of cool things.
Drink.
I think that was 3 right there, wasn't it?
Is that 3 drinks?
Yeah.
Yeah, that sounds like a lot of shilling.
Definitely not shilling.
Oh, man. All right. Well, glad to have lots of personality and lots of opinions on this panel. Let's jump into some of these topics. So first, this is something that has been a hot topic recently, or maybe not recently, just for a while, is mining derivatives. They've kind of been talked about. Now they're starting to emerge. It's questionable about how useful they actually are for hedging. I'm kind of curious what you guys are seeing in the world of mining derivatives. I'm going to start off with Harry. Why don't you talk about your opinion on mining derivatives?
Yeah, so I want to draw a distinction real quick. One of the, there's a couple ways you can slice this. We pioneered a mining derivative in tandem with BitOoda recently, which was basically a transaction fee swap, which is a little different than the difficulty forward that we've worked with them in the past on. But the transaction fee swap is basically to lock in a level of transaction fee cost as a miner, being able to drive additional revenue, and as a, whether you're a Cash App of the world or a Swan Bitcoin of the world, being able to lock in an outbound transaction fee level. So we're kind of excited about anything that's able to drive additional mining revenue up. And we think that the world of financial engineering is going to unlock some nice incremental revenue gains for miners. And we think we're a little early, so we're probably in like the 2 to 4 year range that these types of derivatives are going to get really exciting. But in the short term, I think that the hedging use case is really sort of top of mind for folks, and being able to hedge hash rate growth and being able to hedge price risk are really valuable places to explore.
Personally, I have a super basic question about this. So I've been doing some digging for us recently. I've seen a couple other funds in the space allocating to hash rate derivatives. If you're a US-based fund, like FTX isn't an option for you. Deribit potentially is. I'm not quite sure. I know there's like post swap, POW swap that Jeremy Rubin was working on, which is really cool because it's on Lightning. What are some of the other places that you can do that if you're a US based entity? I'm not sure that there really are any unless you have something set up like in the Caymans, right?
Well, so
Yeah, I mean, it depends. I mean, if you're wanting specific, hash power related contracts, we've worked with BitUda in the past, and they've been fantastic.
Okay, nice.
I think the mining business, just the capital outlay profile of it is such that having the ability to hedge and downside protect, I think, makes a lot of sense, especially as the industry becomes more institutionalized. And the counter side to that marketplace is really that it provides people that are interested in participating in the network via mining an avenue to basically buy hash power and earn the rewards of that you would as an institutionalized high quality, top tier mining facility, and sort of take that mining risk, which is a really interesting thing, an interesting value proposition for a derivative to have, right? You don't have to, now you don't have to go through the headache and the hard work of finding a very ultra cheap PPA or setting up a mining facility. You can just simply buy a hash power contract and earn the rewards that or earn the cash flow stream that you would through actually physically setting up that infrastructure. So I think it's kind of a cool win-win marketplace that I'm excited to see where it goes.
For sure. Bypassing the, multi-million-dollar barrier to entry is a huge thing. It definitely helps create more of an equitable playing field for anyone that wants to get involved.
Cassie,
Totally.
Can you kind of talk about that barrier to entry? What is the barrier that miners that want to get involved in this really face right now?
I'm sure someone else can probably speak to this a little bit better than I can, but there's, aside from just the sheer level of knowledge that you have to have in that barrier to entry, it's a very daunting task to think about, okay, if you wanted to go out and start your own facility and build your own facility out from scratch, what does that look like? There are a lot of decisions that you have to make, not just relating to the type of hardware and the manufacturer that you want to use and how you're going to source it, but the timing of all of that, the type of facility that you're looking at, the location, type of electricity, the type of power that's being supplied, if you want to build out your own substations, and all of that is incredibly expensive. I don't know, maybe someone on here can give an estimate to what a dollar per megawatt range looks like for facilities. Let's say in Texas or something. Does anyone have a dollar figure that
Austin, why don't you jump in?
Range?
Yeah. So, it varies, right? It varies based on air cooled versus your immersion cooled builds. I think for some of the newer gen stuff, your air cooled builds per megawatt can run you between 70 and 90 grand. If you're building it in-house, and then your immersion builds, which a lot of folks haven't figured out, especially containerized solutions for, they can run you some of our estimates are looking $300,000 or in that 250 range, because you have the physical constraint of an 8-foot wide by 40-foot long shipping container. So go ahead.
I was just gonna say too, 300,000 is not for if you're outsourcing it. I think you can probably get it a little cheaper if you're doing it in house. But then you have compatibility issues there too. With there are so many different types of issues you might run into with whatever fluid that you choose to work with. So if you haven't tested that rigorously before, it could impact your entire multi-million-dollar hardware operation. So then you could just be taking an L there. So,
and it's important to note too that different machines have different, varying levels of heat dissipation. So your newer generation Bitmain machines, the S17s, the S19s, the heat sink design on them is such that they're significantly hotter in a Bitcool bath than what your WhatsMiner machines are. And so it just goes on to the scaling costs of your dry cooler setup, or your pump increased size, which the pump sizes and pump costs is a totally different conversation. It's a bit of a nightmare, but I think that immersion significantly it's more expensive, but it has a lot to do with the operating environment in which you're working in. Some of the upstate New York stuff that we see, you can operate air cooled, but West Texas for the cheap power, you have to be immersion. Air cooled down there doesn't work as well as it should.
So Austin, you're saying that the WhatsMiners lend themselves to immersion. I hadn't heard that except for just now.
Yeah, we like the WhatsMiners a little bit better. That's for sure.
For everything, or just specifically the immersion application?
Well, I like them for everything, with the exception
Okay.
that like I can't change anything in the stock firmware. Not a huge fan of that. But even like the air cooled, I think their designs a little bit better. Like they reverse, they flip upside down your network control card, so there's no like dust settlement on it. It's also covered. And then the added advantage of having a PSU that's rated for 277 input is a big deal as well. So
okay, so you guys ramp the voltage to 277, or I guess you wouldn't ramp it, you would keep it from ramping all the way down to 208, right?
yeah, so I think the range for those machines is like 200, 277. There's something in the PSU firmware that kills it if the voltage does sag and drop below 200. And essentially just power cycles, right? But like your Bitmain machines, technically you can run them at like, if you adjust your taps, you can run them at like 264, which I'm not a huge fan of either because those caps explode, especially if they're hot, right? But
Yeah,
it's nice having a higher voltage input for your machines because it affects your wire sizing, it affects everything really.
You lose, if I recall, so we ran a small farm in Kansas City and obviously dealt with tons of heat issues. We had no idea what we were doing, but we did learn a lot. One of the things was by being able to run higher voltages, your wires don't get as hot, which is something that we never even thought about until we actually did it. So
it's a function of current. Yeah.
Right. So I guess by running higher voltage, you decrease, I guess you increase efficiency, but you don't lose as much to heat as a result.
Sure.
Yeah.
And when you start talking about like current pass through, I guess any of your like C13, 14, C19, 20 cables, the strands are also important. What a lot of people don't realize about electricity is electricity just travels on the surface layer of all of your copper strands. It doesn't travel through, it travels across the surface. More strands, more surface level, less heat.
Yep. That's really interesting. So I've heard the Brains guys they're getting close to cracking the What's miners. Do you think that would be something you would use?
I've heard that as well. I've talked back and forth with Marty about it because he does all of our kind of like biz dev stuff.
Yeah.
I think it's in the pipeline. A lot of stuff that's in the pipeline in this industry, you'll see it like a year later, right? So we'll see. They do really good, really, really excellent work. I like the initial BOS that came out. I flashed like a whole bunch of Dragon Mints onto it. And so we'll see. I would love it if they did. That's for sure.
Let me ask a question, just because this is an American mining group here, the obvious issue with What's Miner is the fact that they are manufactured in China, and you have to pay a 25% tariff for those versus, Bitmain has a fabrication facility in Malaysia, and, that 25% goes to 2.6%. How is that something, or I guess, how do you guys think about that? Or how do you guys address like that trade-off of like paying the extra cost there?
Is that a question to me?
Yeah. I mean, just being like a big fan of the What's Miner units, I'm just curious like how you guys manage that.
So I can't speak directly for the people on our team that handles like, the sales, et cetera, et cetera. But I think tariffs are nonsense. And if I was in charge of it, I would find the most legal way to step around paying 28% for anything imported from China. But I'm not in charge of any of that. So,
well, I don't own any machines, and I can tell you how people do it. They set up an entity in Canada, and then they lease them from Canada. And then whenever it's time to send them back, they just send them back. So they never actually got imported. They were just rented. I don't own any machines, but I know that that's how some people do it.
I know some people do it through like Singapore entities as well.
Yep.
I guess they set up.
I knew What's Miner at one point was talking about opening a facility in Thailand specifically to kind of get around this, but I hadn't heard that leasing solution from a Canadian entity.
It doesn't have to be Canadian. I guess it could be.
Yeah.
Canada was exemplary, but it could be, any place that doesn't have tariffs. You can just buy them there and then lease them.
Right.
And when they reach the end of their life, you either ship them back or just say, well, the tariff is null because they are no longer worth anything. So I'm purchasing from a Canadian entity.
So, question
Obviously,
for you
that's not a
guys.
great idea.
Question for you guys: does the tariffs from the USA give any sort of advantage to Canada in terms of accumulating hash rate in the short term?
No, I don't think so. I don't think Canadian miners have any specific advantage over like miners from the US, specifically because they have like topsy-turvy jurisdictional laws.
Yeah.
Hydro-Quebec a few years ago pulled the most outrageous move I'd ever seen, where they essentially suckered a lot of people in for sub 2 cent power and then raised the rates very shortly thereafter, right?
Yep.
So I think that one of the questions that I sent to you, CK, was in terms of like a site suitability index, what kind of like multi-criteria evaluation goes into where you decide you want to plant infrastructure and, you know, set out a huge capital outlay for miners and hope that your power stays cheap there. That was my question to, I guess, the whole panel, right?
Yeah, I can jump right in on that. We spent a lot of time developing like what's our hit list, how do we rate a site, how do we qualify it, because we're not really of the school of thought that we're going to build a gigawatt and put all our mining there. We're much more sort of the portfolio based approach, where we look to build dozens of sites of enough scale to be self-sustaining, but not so big that they become kind of single points of failure within our portfolio. Power cost is number one. Power certainty is number two. So if we're not walking out without a 5-year deal where we know we can ROI, every piece of gear that sits on that plot, it's pretty hard to justify, just from an opportunity cost perspective. So, I think you talk about the difference between Canada and the US. The fact that the US, it's not everywhere deregulated, but the fact that we've got an ERCOT, the fact that we've got an ISO and a couple of other deregulated markets means that kind of the state of play in the US has to match competitively with those open markets, which is something, you don't get a lot of inter-jurisdiction competition between, Quebec and Ontario necessarily, or Newfoundland or wherever. But I know that, you've got other maybe state, city, or federally governed utilities in the US that know that their competition for a big manufacturer of any sort is with ERCOT, is with ISO, is with, the Oregons and Washingtons of the world, or with the Montanas of the world. And so because of that sort of baseline competitive environment, there is this lowered power floor, this lowered competitive hurdle rate that the US benefits from, that we all benefit from.
The benefits of competition. Who'd have thunk it?
Yeah. From our standpoint,
markets plus innovation.
We're not, we're kind of we're vertically integrated on the sort of power generation side of things. We're generating our own power, so we're not really concerned about having a utility sort of changing the pricing on us or anything, because all of that's kind of within our control. We're not tied to the grid. We're producing cheap power basically as a byproduct of solving a problem for oil and gas companies. That's kind of our take on how to remain independent, how to remain competitive over the course of time. It's just to kind of have that element of self-reliance, which we really like.
That's awesome. Yeah. Hey, so we just had Samson join, and it looks like Cassie drop off. But Samson, welcome to Drinks in Quarantine. I just went back to the rules. I know it's probably early for where you're at, so I'm not sure if you're drinking, but the drinking rules are: can't say Bitcoin, can't say drink, and you can't shill altcoins. I don't think you're going to be shilling any altcoins, but those are the rules for drinking. We are talking about hash rate derivatives, but why don't you introduce yourself and talk about specifically what, in regards to mining, you do with Blockstream and other ventures?
Sure. So this is not Ethereum at 5 birthday celebration?
What's that?
I don't know. Okay, so my name is Samson Mow. I'm the Chief Strategy Officer at Blockstream. We do some mining. So we have about 300 megawatts between the US and Canada. I think we're one of the largest in North America at this time. And yeah, that's in a nutshell what Blockstream Mining is.
Awesome. This is the North American mining panel, not by branding, but just because everyone here is from North America. So I think that's a nice angle. Samson, we're talking about mining derivatives, hash rate derivatives, that kind of thing. Do you have anything to say about that?
I've seen some of them pop up. I think BitUda is doing some stuff. I saw FTX is listing some derivatives. I think there's going to be more and more coming down the road, and it's just a sign of the market becoming more mature, because these are things that are needed for miners to hedge and leverage to be a better miner.
So question to you guys, do you think that a CME or CBOE would list a hash rate type of derivative?
Yes.
Yeah, I think they would eventually. I mean, I think you need to. I think having a successful just derivative on the price of Bitcoin, I think is kind of a first step, and as more liquidity forms around that, and sort of demand for other derivative products, pops up, I think it makes a ton of sense for one of those larger traditional exchanges to list a hash power derivatives contract.
So there's actually quite a few criteria that you have to meet to get listed. Obviously, with Luxor doing a lot of work in that area, we have gotten pretty familiar with it. You have to make sure that there's enough liquidity, as Chase mentioned. You have to have a liquid market. It has to demonstrate that it's not manipulatable. So if somebody with insider knowledge or the ability to move the market in one way or another exists, they won't list it. And then there's like 12 others, but those are the two big ones that they really focus on: liquidity and manipulatability. And then also, that it has to be truly commoditized, which I think we can all agree here that hash rate really is a commodity. There's really nothing different about any particular hash rate for a specific algorithm. So it really meets the other criteria. You just really need a marketplace that's liquid and non-manipulatable. So those are the two big missing factors now. And so hopefully somebody can get those put together.
Yeah, I think the non-manipulable one is a bit of a hurdle, considering the lack of transparency from manufacturers at this point.
Certainly.
They don't have any incentive, though, to be transparent with production or shipping numbers, and so I'm not sure how you get over that.
Yeah, certainly. That's definitely one of the biggest hurdles. As we start to see competition in that space expand, with TSMC opening, or at least planning to open a big facility in Arizona, SBI partnering and looking to start doing some of their own chips, Canaan and eBank starting to ramp up their own production. The ability for one manufacturer to really corner that market and kind of continue to do what Bitmain has done throughout Bitcoin's history up till now, I think we're going to start to see that go away a little bit. It'll still, Bitmain's still going to stay king. I don't imagine them losing that anytime soon, but I think it's going to be a lot different here in the next 5 years. I think that's going to be one of the biggest shakeups in mining.
I don't think Bitmain is the king anymore. But it's going back one point. It's very difficult for anyone to be very transparent about their production capabilities or capacities, just because it's a very competitive market. And a large part of that has to do with Bitmain. So Bitmain was very nasty when it came to competition. So they would buy out inventory for, fans or cables or whatever from various suppliers in the supply chain just to screw with other people. So that level of opacity is kind of expected nowadays, just because no one wants to get screwed over because they said too much. But Bitmain's been on a downhill run for the last 6 months, and I think it's questionable if they're going to be around. I think MicroBT is a dominant player now, which is surprising given that they're not public, and other
I think last analysis had them at about 30% market share. I don't see them getting over 50% of the total market share. What's Miner, but they've certainly taken a chunk out of Bitmain's current foothold.
But you got to look. You got to go to the historical look back. Like how many hundreds of thousands of S9s are racked right now. So like to me, I would try to look at market share per efficiency tier. So if you just look at, let's just say, between 50 and 29 or 28 watts per terahash, I think that MicroBT has significantly outperformed, the 50% threshold. And to me, it's just a matter of time before additional units hit the streets and those S9s, become obsolete, or Bitcoin price moons and everybody makes more money than they know what to do with.
I don't know the answer to this, but does anybody have any idea how many S9s were built? Like, is there even a ballpark estimate?
I think we could back of the napkin calculate it, but I don't think anyone has it.
45 exahash or something?
Probably something around there.
Somewhere, we estimated this at like between 30 and 50.
That's around 3-ish million units. What's Miner said they did 600,000 units last year, and they said they'll do double this year. That was actually on the Hashrate podcast, where their VP of sales came on and said they did 1.2 million. So up to now, they haven't even done half of what Bitmain did just with the S9s. That's not to say that I'm 100% agreeing with everyone here that What's Miner has taken a big chunk out of Bitmain, but I don't think Bitmain's gone.
We'll see.
They could be, though. I mean,
so
there's
is Bitmain going to become two different companies? Like,
well, right now it's a civil war, so it's kind of already two companies. They're already fighting for various chunks of the company. Jihan has carved out a few, Mikri has carved out a few, and they're seizing equipment from one another. It's just really a mess right now. But I would say it's basically two companies at this point. There's two Bitmains.
Is anyone here by the the delivery issues that sort of came up? I think it was the Z15s or something like that in June, where like deliveries got canceled or whatnot. I just read about it.
DK, is that an altcoin shill? Because Z15s don't mind Bitcoin. But
that's exactly why I wasn't using it.
We have a lot of altcoin hash rate, to put it that way, and a lot of our customers were affected. They're seeing that the Z15 is not shipping on time. The first batch came out, and now the second batch is just getting kind of I don't want to say indefinitely delayed, but it does not seem like it's going to be. It's certainly not on time, and we'll see how long it is going to be delayed. And that means batch 3, 4, and 5 will be pushed back as well.
I'm curious if you guys who kind of know this Bitmain story a little bit better. Is this whole Mikri Jihan something like that could happen in another country besides China, or are there certain kind of factors in kind of the Chinese market that cause that to happen?
I think it has nothing to do with the Chinese market. It's just they're two very weird individuals. When back in the fork war days, they were the ones primarily advocating to split Bitcoin, and there's this kind of kind of arrogance that they have that they can do something like that, and it lends itself well to fighting over a company. The stuff that Jihan is doing is pretty outright illegal, and I think in any country it would be weird for someone to try that level of shit. So I just don't think it's about China at all. Like I can't see this happening at MicroBT. I can't see it happening at eBay or Canaan. I just can't see it happening in most companies.
It's like there's like an early to Bitcoin curse or something where like getting that rich that quickly, getting that rich on Bitcoin that early, it melts. It can melt your brain.
Look at Roger Ver.
Because it's not about money. Like these guys, they own double-digit % of a multi-billion-dollar business. It can't be about the money. It's about something else, and they're just giving away market share day by day, and the opportunity is disappearing out from under them, and there's no reason for it. There's no sense to it.
It's kind of like Billions. Do you guys watch that show with Taylor and Bobby Axelrod going at each other? Or it's like that. It's almost I'm waiting for the movie.
I was under the impression that the entire Bitmain, I guess, debacle that's happening right now is because they divvied up the company into so many separate entities, and the control of all the different separate entities wasn't because it wasn't formalized. Like, it was split between McCree and Jihan, and so I'm not sure. I haven't read much on it though. I've been off Twitter for a few weeks now.
It's good for you.
Yeah.
Congratulations.
All just addicts.
Yeah, I want to move us on to our next subject. So, with a bull market comes a massive bubble in mining. I want to talk about what the next mining bubble looks like, and if there are any themes around the next mining bubble that you guys kind of have like thought out. Let's jump to you, Nick.
So if there's enough liquidity in the hashrate marketplace for there to, like, how do I say this? For liquidity to exist in the hashrate marketplace, we could see the value of hashrate decouple from the value of Bitcoin, which is something I'm very interested in, at Luxor. I think that's going to, I'm obviously biased because it's the thesis of our company, but we think that the value of hashrate is going to, is not as tightly coupled with the price of Bitcoin as it has been, traditionally. And I think that that's going to continue to digress. So that's what I think is going to be the big change, as
you think it's going to continue to decouple from the price of hash rate?
Yes, the price of hash rate will continue to decouple from the price of Bitcoin. As
Why?
Well, I'm not allowed to explain. There's a lot of places that SHA-256 hash rate can be directed. That's one. We actually, we have a small fork coming up here soon. I don't imagine anybody would contend that Taproot and Schnorr are bad things, but maybe there's somebody that does. During that time, there's going to be somebody that's, if that happens to be a contentious fork, it won't be. But if it did, during that time, there will be people paying a premium for hash rate. So Harry, all the hash rate that you're producing is now becoming more valuable because somebody's willing to pay more to not just get the coins. They're trying to build the consensus. Because ultimately, that's what's happening. Like, you're not actually just taking your hash rate and getting coins. You're building a consensus, and the network is paying you. And right now, that's a one-to-one exchange. The only buyer of your hash rate is the Bitcoin network. But there are other buyers.
It's a control premium. Basically, what you're saying is, like, if I buy 49% of a company, I pay one share price. If I buy 51% of a company, I pay a different share price.
Absolutely. Yep, that's one. There's also a sentimental. There can be sentiment as well applied to the value of hash rate. As I mentioned, adding weight to a particular chain can give it more value. If that happens to become more ubiquitous throughout the industry, the value of hash rate will continue to decouple from the price of Bitcoin. Also, there are many factors that go into the value of hash rate. Transaction fees are starting to become quite substantial. They're becoming double-digit percentages of a block now. As that changes, the value of hash rate increases significantly. So imagine a world where your transaction fee is now, let's say there's 25 BTC worth of transaction fees in a block. The value of hash rate has now gone up by 4x what it was, yesterday. And we see that happen during bull runs. The mempool gets full. People start paying more for transactions. You can see this on other chains. There's a chain that has a really massive blockchain and 150,000 pending transactions. That currently people are trying to build side mempools for that have high or low latency, high throughput transactions with really high transaction value. If something like that starts to come to Bitcoin, Bitcoin's failed. It's already kind of screwed in that regard, but you're going to start to see the value of your hash rate really change over time, a lot more drastically than it does now. I
take your fee point. I think the rest of it, there's a lot more of a social experiment we'd need to see play out for that to happen, especially if your expectation is for that value to flow into a liquid marketplace. But like to me, just to parrot this back to you, like I heard a control interest premium. I heard a sum of all forks argument. The fee one is the one to me that is actually compelling, where basically like hash rate is going to be a proxy derivative for people who are wanting to get long fees.
Right. Yeah, certainly. So if you imagine over the next month that fees are going to go through the roof, you would then take hash rate, go long hash rate, and you would then have the exposure to those fees.
Yeah, that's pretty cool.
Yeah. I'm just saying there's multiple reasons, whether you buy them or not, there are multiple reasons that are in the world that I think could cause the value of hash rate to decouple from just the 6.25 coins that a Bitcoin block produces.
So with this quote unquote decoupling, is that healthy or unhealthy for the Bitcoin network in your guys' opinion?
That's a very contentious topic. A lot of people think that could reduce the security of Bitcoin. If the value of hash rate is not exactly the value that you get from the Bitcoin blockchain specifically, that you reduce the security of the Bitcoin blockchain.
I mean that's
but I'd argue that there's
essence of your first point.
Let's go with Chase.
The control premium whole idea, right? I mean that's basically like a mercenary argument for why hash rate is going to sell at a premium, because these mercenary sort of attacks that people are willing to pay more for the hash rate to own a majority of the network.
Yeah, certainly. But then on the other side, you've got what's the opposite? I don't know what the opposite of a mercenary is. An enlisted person? I don't know. Somebody who's enlisted, somebody who has a very vested interest in Bitcoin. Now they have to go protect their investment. So institutions, I imagine custodians taking a large part in this this decoupling as well.
I was thinking it'd be kind of risky to go into mining just to get the fees, because they're too unpredictable, unless it's been really high for a very long time and it's kind of established a floor. And I don't know if a big bull run would drive up fees like we saw before, because there are a lot of things now in play that would help alleviate fee pressure, like side chains, lightning, or even optimizations. Like a lot of on-chain transactions are still junk right now. If it was all financial, Bitcoin transactions, then we should be okay technically. But I think there's ways to go to optimize, and high fees would just drive people to optimize. Like there are exchanges out there that just don't care still. They'll pay, but they'll overpay. Coinbase, BitMEX, they overpay a lot. And if it gets high, I think they'll do something about it. But for them, it's just, it doesn't matter. As long as the money's flowing, they'll pay.
If you're getting into mining now, you're betting on fees.
You think so?
Yes, certainly.
I don't think so. I disagree.
You're betting on price going up double?
Yeah.
Yeah.
Not even double. 10x.
I think mining reward is very underrated for most Bitcoin skeptics. Like they don't talk about the fact that the buying power of the Bitcoin reward right now is much, much higher than when the reward was, like in BTC terms, 50 BTC. The actual buying power of that reward was tiny. So like I think that the subsidy is gonna just keep getting bigger.
Yeah. So for Blockstream,
go ahead, Samson.
So for Blockstream, we mine and hold or hodl. So I don't think we sell anything earlier than 2 years for paying off any costs. So for us, it's fine. Like even if we're losing, we don't really care. It's not like we need to sell every month to pay the electric bill. So maybe it's a different dynamic for us.
Yeah, I think if you have a business that has multiple streams of revenue, that's probably the way to go. Historically, that's always been the way to go, is to hold everything. Secondary to that is to sell just what you need to cover your operating expenses and hold everything else. And so, Nick, do you guys just run the pool, or do you also like run machines?
No, just pool. We don't run any machines.
Okay.
Actually, I think the Blockware guys did a pretty interesting analysis and said that was the best long-term strategy as of today. If you mine just like with just one S9 and just sold to cover cost, sold to cover your OpEx, that yielded the highest return on your investment. And it was like some absurd number, like 350% or something.
Yep, it's crazy.
Number go up.
Right.
I kind of feel like at some point there's going to be like this like fork of all forks where like, you know, as the block reward reduces over the course of time, like the, you know, you kind of need, you know, as that you need some inflation rate. You know, the inflation basically is the security of the network at you know, and I know this is kind of 21 million is kind of like the, you know, it's like a religious, you know, people are attached to that number. But I think at some point there's going to be a fork, and I know this is kind of a contentious view, but I do think there will be a fork where, you know, in order to basically continue to provide security to the network, you're going to have kind of like a fixed inflation rate or something that notion that, you know, enables, basically provides an incentive for miners. Because I don't believe that fees will kind of cover that at some point.
On what time horizon are you talking about? Like 100 years or 10, 20?
Within 20 years.
I don't know.
A chance. 0% chance.
If you're talking about 100 years, maybe. But I think near term, like 10, 20.
That might be the hottest take. That might be the hottest take.
Yeah. No, I understand it's a controversial view, but I also I just think that, you know, at some point the inflation rate, you know, the reward for what it's protecting is not going to cover the costs of doing it, and I think you're going to have to incentivize the miners to basically provide that security at some point.
I think that that's also assuming that we're operating under the same conditions in 100 years that we are today, right? Like, what about advances in, like, you know, transmission losses? Like, if we can greatly reduce transmission losses of electricity, then in general, we would think that, you know, we would see our electricity rates go down significantly. What about like actual on-site renewables generation that's not just from a dam? You know, like there are all these other, like, what about battery technology? Like when it's finally where, you know, in 100 years, or we thought it would be in, you know, today, 10 years ago. I think that there are a lot of advances that aren't taken into account that just, you know, we feel like society today is a really well-oiled machine, but, you know, I'm sure 100 years ago, people thought that they were living in like the wildest time. But what about 100 years from today, you know, when we're, you know, continuing to advance? So I think that there's, I definitely hear your concern there, but I think that there are just so many unknowns. But
no, there are. I agree with that, but
that to me is the best argument for the 21 million. It's the certainty, it's the future certainty that can last the 100 years regardless of the technical innovation. Mm-hmm. And so I think people will pay for that.
It's even questionable, like in 10 to 20 years, are there still going to be advances in ASICs, or do we just hit a limit and it becomes a like basic commodity, and there's like just one price to buy, and you know, you don't need to re-up or do anything or refresh your hardware, just run it, and maybe it doesn't even burn out after a couple of years. You run it for like 10, 20 years. You know, we don't really know what kind of scenario that will be, and maybe by that point all the major mining operations just have their own hydro dam, so it's just like this thing that just runs in perpetuity. It doesn't really burn out over time. I don't know if you guys know Warhammer 40K.
I mean, there's still maintenance and OpEx. You know, there's still like a lot of I don't know. I mean, there are still costs associated with providing security of the network, and if what it's securing, if the you know, the cost of basically investing and attacking it is like less than, you know, what you know the reward from that would be, then people are going to attack it.
Yeah, but you can have really low maintenance structures. Like a hydro dam lasts for, I don't know, maybe 100 years. Once you have that all in place, it just kind of runs. So if you guys know Warhammer 40K, it's like this sci-fi series. They're all in the future. They're using tech that they don't even know how it works anymore. They just use it until it breaks, and they hopefully find something to replace it. It could be like that way in the future if it's dystopian, where people are still mining, but there's no way to produce ASICs anymore. They just keep using it until it runs out.
Technology.
Yeah.
building a hydro dam around a single, like an operation, even if it's not a single operation, and like, let's say, all other like qualitative risks aside, like government regulation, et cetera, then you're basically making a multi-$100 million investment into an operation that you're expecting to last for 100 years. So it's like, I don't know, you have to walk into that investment thinking like, I'm going to do this and put this money aside. And this is like me thinking about today, thinking 100 plus years into the future for this investment. It's just a long time. And
multiple billion, I think it's well over, I think it's probably in the tens of billions.
So I don't want to interrupt the conversation, but I do want to steer us in a slightly different direction. Our last topic is the next S9. What Samson brought up was the commoditization of hash rate of ASIC miners. Commoditization means that like it's just easy and it's not difficult to go and get miners. You can get them from anywhere. They're built in many places. Potentially, and they last a long time. Potentially, we can see that the S9 is the first kind of quote-unquote ASIC made to last. Like, what do you guys think about this idea of like commoditization of ASICs and hash rate? Let's go to Cassie first, since you were talking.
Can I want to hear everyone else's thoughts on this first. I feel like there's some other people. I don't know where to start with that one, so I'm going to pass that off to someone that wants to take it.
Chase, go for it.
What do I think? So I do think that the rate of innovation has slowed substantially. I mean, I think that's just kind of like as the space has matured and the increased efficiency gains that have resulted from capital investments, and as we sort of work with smaller and smaller silicon, the efficiencies gains slow as well. So I think it affords itself to a model where you do have sort of a longer operational runtime for generations of hardware. You do kind of have greater commoditization that sort of exists. But there's still definitely like ways for hardware manufacturers to sort of set themselves apart, with kind of the way they're managing, like their heat sinks, for instance. This whole discussion around, how they're managing heat dissipation. But also, I think an area that's historically been underinvested in by the hardware manufacturers on the software side, I think, which has created this whole niche market of custom firmwares that exists. I think I don't know. I think there are always going to be ways for people to get advantages, and always ways for people to get edge here, and that's why it's kind of an exciting marketplace to participate in, and exciting place for people to kind of set themselves apart.
Anyone else want to jump in? Harry?
I'll challenge the premise.
Marty has a strong opinion on this from GAM. He says the M20 is the next S9. He probably runs more M20s than anybody else, other than WhatsMiner.
Yeah, I'm gonna challenge the whole premise and say that the S9 was great, but that the S9's success is a product of when in Bitcoin's life cycle it came out, as much as it is a great piece of hardware. So we saw the price of Bitcoin go from whatever $800 to $20,000 during the height of the S9, and so it got to ride the best tailwind from a market mainstream perspective of any of the hardware units. So when Bitcoin goes from 10,000 to 1 million, or whatever the next run up is going to look like, I wonder if we have recency bias around kind of how great we think that machine is, because it earned us the most dollarized Bitcoin profits.
I'd also add that, like, I think, chips aside, on a per unit basis, there's just such a severe lack of standardization in the machines and like what's actually going into them, that kind of shows that there's really just a lack of testing on these machines and all of these different components and how all of them interact with one another. So the lack of testing on each of the individual pieces that, you could just go and replace one transistor with any other transistor. You can't really do that. Like, it has to be, appropriate for the rig, but like they're not standardized from one unit to another, even if it's an M20. And then thinking about like, okay, well, there's an issue in terms of like lack of testing, but it's also an optimization issue of all of those component parts functioning together as a whole unit. So I think that there's definitely a lot of work and improvement to be done around that, but that's probably really time consuming and really costly research. So it makes sense why it's going to be the last piece of the puzzle to be, improved upon.
And costly assembly.
Also, yeah. And also just from like a form factor standpoint, I mean, miners around the globe invest a lot in kind of infrastructure, and the more they can kind of optimize on over sort of a standardized form factor, I think like, it actually sort of create greater efficiencies for the whole ecosystem. I mean, the idea of, most data centers have, standardized rack mounted servers, and, that's a very standard unit size. There's like nothing of the sort in the mining space. So people have to sort of come up with all these sort of unique hacks to like support S17s and S9s and M20s and, all these different sizes, shapes, power draws. That's the other. And then, when you overclock things, like how do the, your local power distribution, how that handles it. The more that we can create standardizations in the industry, I think the more kind of everybody benefits, and the more kind of like there's a broad scale efficiency sort of reaped by everyone.
Yeah, I definitely think that standardization is the future. I'm hoping it's going to be like a 1U server and all the chips will just be interchangeable.
Yeah.
That'd be like a wet dream.
Right?
Yeah.
Like way too simple though, way too simple.
Yeah, it's difficult to get there, right? But I know like one miner, they actually had like their hot air aisle separated with a piece of sheet metal with holes cut into it for the right place for the fan of one particular unit. That's not scalable. You can't, if you change it out, the hole moves like an inch up and it doesn't work anymore. But we need to go in that direction, definitely.
The issue with those form factors was just cooling, right? It's too dense, right? You can't. Yeah. So there will be, like, I understand what you're saying. There won't be a U6, but it'll be some, like maybe the Bitfury, like I know those are really old, but like those Bitfury models were pretty dense, like 6,400 watts. Those are probably like, I would have to, if I had to guess, I don't run a mining farm, but those are probably the best form factor for, from a density standpoint.
I mean, if you could have like a 1U immersion cooled like unit that was just like, everything's sort of self-contained, and then like hook it up to your your own plumbing, like that would be awesome. But
yeah. So the other question is like, who will make the next S9? I think the next S9 is not going to be a Bitmain, so it won't be S something. It's going to be micro BT, so it's going to be M something.
M20.
Yeah, maybe M20. We'll see. Maybe, but it's definitely going to be from
series.
Them because they have Yang Zuoxing. He's like the guy that made the S9, so it's likely them, or it might be a new player, someone that's going to come in out of nowhere that has a lot of chip design experience that has not been playing in this space, and it's just going to surprise everyone that they can achieve this. But ultimately, we'll hit a limit. Maybe the limit is 10 joules a terahash, and we'll never get below 10 joules a terahash just because of thermodynamics. But we'll see. It's interesting to watch, nonetheless.
Do you have any theories on who that could be, Samson?
I don't know. It could be anyone, but like a lot of the manufacturers now and designers now, they're not from like the semiconductor, the major players like HiSilicon or something. So maybe some genius will just come out and design a new ASIC that's going to be super efficient.
Here's another contrarian opinion: is that the next S9 won't be an individual unit. I mean, when you look at the S9, it was like primarily designed for sort of almost like retail consumption, like people buying like a handful of rigs. The trend in the mining space, I think, is towards more institutionalized mining. I mean, I think everybody here runs fairly large mines. So, another alternative future could be that the next S9 is sort of a like industrial scale solution, like a 1 megawatt designed, larger scale thing. Like, Layer 1, for instance, sort of comes to mind as like an independent group that's, kind of designing, working with their own chips and sort of designing the system at a larger scale, more holistic viewpoint. But
I think with that, we'll need, institutional scale financing methods. And I think right now that's something that we're really lacking. I don't know if anyone can speak to some of the ways that they've been able to, aside from, I know some of you were able to bring on private investors at, different sizes. But what has that been like for all of you? I'm just curious to know. I mean, obviously everyone's operation is a very different size too, so.
Yes, I'm happy to answer.
Spill the beans.
I don't know if it's secret sauce or.
We've worked with a lot of kind of more institutional type investors, and I think what really resonates with our story is that the fact that we're sort of solving a problem for one industry, in the oil and gas industry, where natural gas flaring is a problem that really persists around the world, and it's sort of existed since we've been producing oil and gas. And you look at it as a global problem. You have 14.5 billion cubic feet a day that are being flared with no beneficial use. That just sounds like a really big number to put it into context of how much gas that is. That's like enough to power the whole continent of Africa, and supply the whole continent of Africa with power. And it just kind of gets burned up in smoke with no beneficial use. And our whole concept of basically, the reason people are flaring gas, it has nothing to do with the fact that they hate the environment so much that they're just setting gas on fire, creating emissions with no beneficial use. It's fundamentally a transportation problem where people can't transport gas from the wellhead to a downstream market where they can actually monetize it. And we really approached it from this idea of the traditional mechanisms were focused on either compression or liquefying the gas. We sort of turned the idea on its head and said, is there a way we could actually consume the gas and utilize it on site? And instead of and with Bitcoin mining, instead of having to transport gas, we just have to transport data, which turns out is a lot cheaper and a lot easier. I think that story of kind of solving this one market inefficiency with another problem, and Bitcoin mining, fundamentally one of the most valuable inputs is power price, and I think by solving this problem, I think we're able to achieve some of the cheapest power prices in the world, or at least very globally competitive. So that was kind of, I think, what resonated with a lot of our institutional investors.
What is it like right now? With I imagine that maybe this isn't directly affecting you, but maybe in other places where they've stopped drilling, so there maybe isn't gas or isn't nearly as much to flare, and so you maybe have some an uncertainty factor to think about there.
So I think there's two factors at play here, right? One is new drilling. So the rig counts are at historic lows right now. So a lot of production is being cut down with sort of this demand shock that you see in the global oil market. But so that's going to impact the amount of future gas that could be flared. But the size of the market is so massive right now. The U.S. alone, you're looking at almost 1.5 billion cubic feet a day that get flared. I think there's still a very big, rich, healthy market to go after. We did see impact with operators sort of shutting in wells when oil prices went to negative $35, which was kind of a sort of unthinkable thing that happened. I mean, this was never on anyone's business plan, right?
Right.
The cool thing of it, some people talk to us, and or sometimes when I've had conversations with people and they say, Bitcoin, that thing's pretty volatile, right? I'm like, yeah, but at least it's never gone down 300% in one day like oil did. So that's it's
reallocate.
Not that volatile. Never gone down more than 100% in one day. So, but I think there are still a lot of big oil and gas companies that suffer from fundamental infrastructure problems that we really feel like Bitcoin mining is a great solution for. So,
So you brought up a really good point, and we're going to kind of transition the show kind of to the second half, which is this mempool section where we let you guys kind of bring up questions, topics, things that you guys have been thinking out about, things that you guys don't think are talked enough about, and kind of bring it up to the panel and let the conversation flow that way. I want to kick it off though, which I don't know if it technically is part of the rules, but we're going to do it anyway, because you bring up an interesting thing that 2020 has been this year of the Black Swan, even though, I don't know if Taleb would call coronavirus the Black Swan event technically, but we've definitely seen these just unforeseeable type events emerge that have totally changed the landscape. One thing that people have talked about, for instance, that may affect the mining landscape is this Three Gorges Dam. I don't know if there's any validity to that actually being an issue, but I'd be curious to hear what you guys kind of see would be some big, Black Swan events that could affect the mining industry. I don't know who wants to kick us off here.
If the Three Gorges Dam collapses, Bitcoin mining is like the least of, the world's worries. That's gonna whatever, 500 million people are going to be impacted, it's going to make Hurricane Katrina look like a, preschool, play or something. I mean, it's going to be a disaster.
Yeah, thanks, Chase. I think we do talk a lot about that. We have meetings every week to talk about different things in mining, and the Three Gorges Dam going down is definitely one of them. But if that goes down, Bitcoin mining is definitely very low on the list of things. Everything would be impacted, not just Bitcoin mining. Manufacturing of everything, iPhones, an entire country would be ruined. So.
Yeah, you kind of see a bit of that with the coronavirus, right? Manufacturing supply chains were hit just because people couldn't work. And that wasn't very pleasant. So if that does happen, it's going to be 10x, 100x worse.
It'll be the worst natural disaster of our lifetimes.
Yeah.
Like by an order of magnitude.
Yeah.
It's gonna make Chernobyl look like nothing.
I was thinking.
Yeah, I cannot wrap my head around the scope and scale of the negative impact there from a human life perspective, from a global economy perspective, from a how do we go forward perspective. It is.
I'm certainly ignorant about the mechanical engineering and the whatever structural engineering that goes into a dam, but is it not the type of thing where they can just continually flood just keep the floodgates open so that it just sort of continues to flood the valley without the dam actually physically breaking? I mean, maybe someone.
It's a little bit more complicated than that. They can. It's just there are downstream dams that would also be impacted.
Can they just open the floodgates on everything for? I mean,
yeah,
you're going to cause flooding, but I mean,
there's
more
bottlenecks
letting it build up and just burst.
There's just bottlenecks at some of the smaller dams, when you consider the size of the Three Gorges Dam, and then you consider the size of some of the downstream dams. If you open Three Gorges 100% to its maximum, allowable cubic feet per second that's flowing through there. It's like dropping a fire hose into a water hose, right? You just can't really pressure as much. And so the question there is, okay, can we prevent Three Gorges Dam from collapsing structurally by opening up floodwater? Sure, but then you're gonna the cascade effect on the smaller downstream dams is a bit of a bigger issue.
The real solution is get out the weather machine.
Yeah, the real issue is just the massive, ungodly amount of rainfall that's happened over the past I don't know how many years. But structurally, we've seen some satellite imagery from Google's Google Earth imagery. That's the most recent stuff. Those structural issues that people talk about are just a stitching issue with how each pass of that satellite, how the images are stitched together. So right when I got out of school, I was working for Garmin, big GPS company out of Kansas City. And they I was on their marine team. So we traveled around and we took bathymetric surveys of all the lakes and rivers in North America. And part of the engineering job that I had to do was stitching the grids together. Because similarly how when a satellite passes over, same thing when you're riding a boat down a river, you can't get an entire bathymetric swath of the data that's underneath. So then you have to go stitch that together. And sometimes you get variations like we've seen. Don't get me wrong, tons of rain. I talked with Marty about this a couple weeks ago, but at the same time, those images aren't a real depiction of what it looks like right now. So was that
Samson,
my question?
Samson, you guys have a satellite. You can confirm some of this for us, right?
No, we don't have
Little-
imaging satellites.
Little quick
Ours,
check on that for
ours are
the next
broadcasting
pass.
Bitcoin blockchain. We don't have cameras.
Next one.
Are there back to the root of the question? Are there other black swan events in Bitcoin that could cause a disruption? Yeah, I know. I wouldn't describe the Bitmain thing, the feud between Jihan and McCree as quite black swan. You know, people have quarrels in business all the time, but it does impact the biggest manufacturer. Are there other cases of an event that could massively detriment Bitcoin as a whole?
Price.
Yeah. Here's a crazy one. What if the Federal Reserve just started printing trillions and trillions and trillions of dollars?
That's good for
Completely
Bitcoin.
devalued the US dollar. What would happen to the Bitcoin market? That would be a crazy.
We are going to find out, Chase. God damn it. We're about to find out. I don't know, but we're going to find out.
Yeah,
All signs point to up and to the right, but we'll see.
I agree.
other black swan events might include like a high altitude EMP or like a massive solar flare.
Yeah,
that blasts all of our distribution and transmission systems. It could definitely solve some of the congestion problems that these demand response programs are looking to solve. But yeah, at that point, like Bitcoin mining is the least of our worries, right? In the Three Gorges Dam.
What happens to, I'm posing this as it's kind of a black swan event, but in the event of like World War III breaking out, right? So say U.S. goes to war with China. I think like silicon foundries become sort of, I think we can all agree that whatever the next war is, if it ever happens, is a war that's going to be fought, a lot with,
It's
digital. Yeah, it's going to be fought a lot with bits. That's a great way of putting it. What happens to the Bitcoin mining industry? What happens to, I don't know, what happens to a lot of things like in that scenario? How is that impacted?
Chase,
Well,
what happens if China goes to war with the US? What happens?
No more miners in North America.
Right. Well, no. I mean, I think it accelerates a lot of the development of foundries domestically in the U.S. Right, and I think it accelerates the pressure on domestic energy production, right, which are like two of the core ingredients to Bitcoin mining. Does Bitcoin get attacked by like some nation state or something like that? I mean, one of the big ways to historically fight wars has been economic wars, right? So whether that's trade embargoes or whatnot, and if you have a permissionless value transfer network like Bitcoin, how is that viewed in the eyes of the nation state actors that are at play here? I mean, does China spend whatever $100 billion to basically build their own state-owned, or do they repossess the existing large hardware-producing manufacturers and 51% attack the network and try to kill the Bitcoin network? I don't know. I'm just like,
go ahead.
I was just gonna say, I feel like all trade wars are, essentially currency wars. That's like basically what they all boil down to. And so what happens when you take out the centralization aspect there? I don't know. I think that then we would be in a, competing with one another, China and the US to get as much hash rate as possible into the country. And there would be like no rhyme or reason. I think it would just be like one is doing it, so the other, kind of follows suit.
I think it would, my theory is that it would kill the Bitcoin mining industry because you'd have actors participating in the network that actually are not, basically we are economically rational actors as miners in the industry, and we'll mine so long as it's economically rational for us to do so because we're all capitalists. If you have someone that has other motives that are unrelated to that, they're willing to mine at a loss, right? They just view it as a sort of cost of conducting war.
My question is, how can they actually successfully compete against the market, though? Because you guys all know that Bitcoin mining is the most ruthless market out there, and it's just like pure capitalism. Like, how long can those entities compete? And when they do want to compete, like, what state are they in, and what state is Bitcoin in?
Yeah, I think there's like three heavy threads to pull on in the game theory here. One of them is, do we think that a state, and this is not an assumption I'm willing to take a side on yet, but do we think that a state attack on the network is going to come from an attempt at a 51% attack? So we could enter into a dynamic basically of hash proliferation. So rather than nuclear proliferation, we've got hash proliferation of building up reserves and participation. What I think is more likely would be asset seizure and asset forfeiture and asset purchasing. So, you know, rather than a nation printing $100 billion to go mine Bitcoin, they should just print $100 billion to go buy Bitcoin, and to become the dominant player and support the currency, maybe. So I think there's just like a lot of other, like there's a lot of.
If their goal is to kill it, right? Their goal is to kill it, to prevent it as being a mechanism to transfer value across, you know, nation borders, because, you know, they want to be at economic war with one another. Like buying it would do the opposite effect, right? It would
crash the price. Buy it and crash the price repeatedly. Totally undermine faith in the value proposition of the hard money.
Yeah, no, that's fair. But I think maybe the approach actually wouldn't be buying it. It would just be whatever, just
seizing it.
Would that not lead to a civil war and like so much unrest within the country itself that the country would probably become like fragmented after that? You know, like that's just such a radical strategy though, that like, could you imagine if that were like, even in today's world, if that were the government strategy for anything and they were just going to, you know, buy assets and crash the price of them while continuing to print money and devalue every known currency to man, so that like every person in this country was just like ridiculously poor at that point. I don't think that that's something that, you know, even 20% of the population would be on board with. I think
that's been the last 40 years.
It has, but it's been so, I don't know how they could do it in a way that wouldn't be so straightforward. I mean, I guess, yeah, but yeah.
I've thought about this. I don't think there's any way that a nation state can successfully attack Bitcoin. Like if you want a 51% attack, you have to steal from somebody, right? And you probably need to steal a big transaction. And that's not that useful. To prepare for that 51% attack by either nationalizing or seizing hardware, that's like a long running thing. And you know, governments, we know they're pretty incompetent. So how can they possibly do that and not have anyone find out about it? Well, if they wanted to print money to buy it from the miners, I mean, you could do that, but then they would be devaluing their money to do so, right? And I'm pretty sure miners are smart. If you just see like your government is gonna like throw heaps of cash at you, you'll think, where's that coming from? Do I want that? Is it like in China's case, there's capital control. So what am I gonna do with all this money? I can't move it anywhere. It's stuck here. So, you know, miners are not dumb. Miners are quite smart.
If China seizes, like China walks into Bitmain's office and say, you know, hey, you know, all of your production is now going to go to us. And they do the same thing for, you know, MicroBT and Canaan.
Yeah, but that opens another can of worms, which is who will do business with a country where they just seize your assets, right? I don't know if it would make sense to seize it at the Bitmain level. I would seize it at the TSMC level, right? But then, you know, who would set up shop in China? Who would continue to set up a company in China?
It's a lot easier to just go talk to Poolin and go talk to F2 Pool and just get them to do what you want, because at the end of the day, that's where the hash rate ends up.
Yeah, but that doesn't really work either, because we had that with the hard fork, and then everyone said UASF, and we're coming up on the anniversary, so it's kind of meaningful, right?
It's coming up soon. We've got a couple of new features coming out soon. So
yeah, so no matter how I hash it, pun intended, I just can't see any way that someone can kill Bitcoin. Bitcoin is invincible.
I agree with that.
I think if you make it federally, like in the U.S., if it was illegal to own Bitcoin, let's just say it's illegal to own Bitcoin.
Bitcoin is free speech money.
I'm just saying
Yeah,
right there.
Bernstein versus Department of Justice ruled the code of speech.
Let's just say there's a government that represents over 1 billion people that says Bitcoin is illegal. That will be a massive hurdle for Bitcoin to ever overcome.
That's a massive add to Bitcoin's value proposition.
Yeah.
No, I'm not saying that it's not. I'm not saying that it's not. I'm just saying that would be a very big hurdle.
I think it just creates a lagging effect, right? It's all about like user experience and interaction there. And so like we're just not where that is seamless for you to like, control your own keys yet. And so until we're there, there's just going to be that lagging effect. But it's also going to like kind of exponentially speed that process up, just in the sense that people then want control over their money and they don't want to give up their Bitcoin. So they're going to like be okay with the learning curve required to actually hold your own keys.
That's totally right. If they like make it illegal or they try to see stuff like, people are comfortable holding stuff on exchange right now or whatever custody solution they have now. But, people will figure it out pretty quickly.
Yeah.
Short term, I definitely agree though. I think that, it will certainly have an effect.
Any declaration of Bitcoin being illegal is like the recipe for instant revolution.
Yeah.
Governments only have power because the people allow them to have power. And if you strip the people of some basic right like that, like free speech or even just money, like that's not going to end well. There's more people than there are people in the government.
I would just argue that I agree with that. I just think the counter is that like the strategic playbook that governments have run thus far is boiling the frog is effective for a long period of time.
Absolutely.
Where like the cancel-on effect is winning. It's winning massively. We just see it in asset prices and in income and wealth inequality numbers today. Like, I don't think that's because capitalism's broken. I think that's because fiat is broken.
Yeah, certainly.
Yeah. But I would say people are waking up though, right? Because like in 1971, when they took fiat off the gold standard, what do? You write a letter to your friend. But now we have the internet, this magic thing that lets us do Zoom conferences and whatnot. So it can't go on. There's no way that it can continue, and people are just gonna accept it blindly. Like everyone knows money printer goes burr now. Even people playing like League of Legends, like streamers and casters, they know it. So it's just a matter of time.
Agree.
I will say one thing that we have working against us is that the mainstream narrative won't connect those dots yet. You're not going to listen to CNN or NBC come out and say, listen, everyone, quantitative easing is leading to wealth inequality. So it still takes some amount of exiting that mainstream, bubble in order to kind of figure out the actual root cause of a lot of the unrest that's happening in the world. So it is the boiling of the frog still kind of working in that scenario.
What's a better approach though? I mean, if you're the Secretary of Treasury, what's a better approach? I mean, like coronavirus hits, it's like such a black swan event, right? It's like what do you do? You just like allow for 30% unemployment, and people, there's no like capital cushion for the government to step in or anything like that. Like what?
Well, it's a black swan event, especially in peak fiat times, right? Like we were not set up to be robust whatsoever. We were maximum fragility, maximum debt. Like we were in position to get wrecked at the hardest. Like potentially in the future, there's a world where people and economies aren't in that state. But yeah, you're right. Like in this situation, like if you can alleviate the pain, that is the short-term beneficial thing to do. Like of course. So of course they're going to do it.
You have like a unique optimization function, right? Because you're also managing against social unrest, right? Like you want to create the the right incentive structure to like maximize like real GDP growth, but like you also want to like minimize like social unrest, right? So like a weird step function event like this that sort of is like a change of state. It like really I don't know. I don't really know what the right answer is, but
The key thing to go ahead, Cassie.
Okay, I was just going to say the difficult thing there is though that every country that is pegged to the dollar as at the whim of the United States Treasury and their decisions, because if they're not printing money as fast as the United States is printing money, then they're in an extreme deflationary environment, right? Where they're just losing purchasing power every single day. So they have to print just as fast. So they don't really have a choice in this matter as long as they're pegged to the dollar. So I think that that's kind of like, it has to be where we're headed.
Ultimately, that's everyone.
Mm-hmm.
Yeah. So the other thing to keep in mind is that money and power are two sides of the same coin. A government may not like Bitcoin and they may want to ban Bitcoin, but the people in the government will want Bitcoin because they've tasted power and they know what money is, So it's difficult. Like if they end up banning Bitcoin, they're going to hurt people within the government. So you have that effect where the people in power don't want that, because then if they're on the wrong side of the political movement, they could get their assets frozen too. Bitcoin is a hedge for them, just as it's a hedge for the normal everyday Joe.
Well, and that's the beauty of the Nash equilibrium that it represents, which is that it represents it on an individual to individual level. It also represents it on a jurisdiction to jurisdiction level. Like that, being able to play at multiple levels in the same way at the same time is like why it's so ridiculously powerful.
Yeah. And actually, who was it that talked about World War III? Was it Chase or Cassie?
I think that was Chase.
Okay. So just going back there, I think you said World War III would accelerate foundries being built in the US. But one does not simply accelerate foundry building. That takes a long time to get going, And it's just like the masks for during the COVID epidemic. Like, the U.S. had no masks, no PPE gear at some point. Because
I think it's the key is like a war doesn't happen like it's not like we're not at war and then the next day it's like, oh, we're at war. It's like,
well, that's how it used to happen.
It's not really. I mean, there was like people were preparing for things. It was like social unrest kind of escalates. Like your probability of going to war, it's a continuous function, not like you're not gonna have like discontinuities in it. Like
back in the day,
the thing about coronavirus is that it was very much like a complete discontinuity of state, right? It was like
well, back in the day, people declare war and then next day you're at war. But
no, I know, but like the day before they declare war, it's like, well, like the p-value of them declaring war is like probably like 0.8.
Right. But my point is, like, if you have no foundry and no manufacturing capacity, you're not gonna have ASICs at that point. So whoever controls the foundry controls the ASICs.
Would you guys say then that like one thing to look out for in terms of are we heading to a war would be if all of a sudden we announce that we're moving manufacturing back into the US and trying to create a token foundry in the US, and like, are those red flags at that point?
That's kind of what I'm saying, right? It's like, there's like certain things that, if our supply chains were like cut off, I think like a silicon foundry seems like probably like one of the most important resources to have in the event of a war.
Yeah, but that's not the only thing. There's so much more to being able to produce it that you need to be able to produce an ASIC. Even if you can make the chips.
I'm not even worried about ASICs. Like I'm just saying, like ASICs is probably like the least important thing, like in the event of a war, right? Like
I don't think so, because in the event of a war, in the event of a war, are you going to take that fiat from another country that they can print at will? I don't think so. You go back to hard money, like World War II, World War I, you go to gold. You don't take their paper. If there is a World War III, you take Bitcoin, because that's the only thing that is truly apolitical.
I mean, gold will have a play, but Bitcoin, I think, is really prime for a play too.
Yeah, no, I agree with that. I think it's a great point. So yeah, maybe I don't know. Anyway, my point is that conducting an attack, like I think like if I'm the U.S. Department of Defense, right, and I'm like orchestrating an attack on the country of China. China's like transitioned largely to kind of like a cashless society. The critical infrastructure is, transportation is like largely, developed, based on mobile. Like commerce is pretty much, exclusively driven by mobile. If I'm like the U.S. government, I'm probably like thinking through, all right, how can I disrupt their, financial, commerce ecosystem through, some sort of like large scale, hack or whatever. And in order to execute that, we're going to need to own, the most cutting edge, supercomputers to be able to really effectively execute that. And I'm sorry to take us down like this complete freaking weird thing, but the question was around Black Swans, so I think it's an interesting discussion for us.
Yeah, I'll give you guys my Black Swan.
I really enjoyed hearing y'all's thoughts around that.
My Black Swan is kind of related to what we've been talking about. I think it will be a nation state getting into mining. I don't think it's that far-fetched. Like we've seen Iran talk about it. I think Ukraine has tabled it, and it's just a matter of time in the next couple of years that you see a nation state mining Bitcoin.
And Samson, I'm just going to throw in, Venezuela keeps seizing miners that aren't registered with Venezuelan, regulators, and we have no idea where those miners are going after they're seized.
Sure we do. Sure we do. Go ahead, Cassie.
I was just going to say at one point I knew of some deal flow that was going through and proposals that were going through to the Venezuelan government on like building out massive operations. Those are huge contracts. I don't know what happened with them. I didn't really want to stay in the loop in that conversation. I felt it was better for my safety if I wasn't. But it's just it's interesting. And I mean, who's to say that that's not already happening, kind of under our nose? So
it's easy to ROI when your acquisition costs are zero, huh?
Yeah.
and your power costs too.
And your power costs are
margins. Just think of the margins.
The margins are beautiful.
But how long can they compete, right? Like
where
that's
do I
an
invest?
arbitrage that only they can take.
Yeah. When's the token sale? Sign me up.
Getting back to the Black Swan topic, at this point, I'm not sure there's a Black Swan event that can take Bitcoin down entirely. I'm just, I think that there can be some hurdles. Like I said, China making it illegal would definitely be a hurdle, but I don't think at this point there's really anything that can stop the Bitcoin machine. It's just how fast do we get to the moon, and what are the hurdles along the way?
I like
That's
it.
right.
I heard a lot of Bitcoin. People said a lot of Bitcoin, and that is an illegal word. So that means I want to see everyone here taking a sip of their beverage. I'm going to drink and double drink for that.
I think at one point I counted 7 from Samson in a 2-sentence period.
Caffeinated.
Ace, you have the Harmony or the 17?
Did anyone else bring a question, thought? Sorry.
Yeah, good.
Anyone else have a question or thought that they wanted to bring to the mempool section?
Just real quick, adding a comment on Nick's comment right there. It's almost that, as soon as we finally solve the Byzantine generals problem, it's like that's the biggest solution in the world. And like once you solve that, it's just click, like there's no way to break it. And that's kind of something that I've been thinking about recently, but just wanted to throw that in there.
It's like a global hash function. It goes one way in, it doesn't go out.
I don't think it's possible. I think it's physically impossible to solve the Byzantine general problem.
I have a question / comment for the mempool in the group is so I think 17 was obviously like insanity, and I think that kind of the fundamentals where we were then, the Fed balance sheet was a measly few trillion at the time, and so I feel like price greatly ran ahead of fundamentals at that point, and I think we see that in the retail. We saw that in the size of the retrace and the duration of the retrace. But like right now, it feels like it's flipped. It feels like the fundamentals are running like so far ahead of price. Between money printer go burr, there is no plan for a deficit to ever go down. There is no plan. We're not even able to talk about inflation intelligently. We're not even able to talk about the Canton effect intelligently at the economic level, not at the monetary level even. Like these aren't terms, these are terms that Bitcoin Twitter is really comfortable dealing with, but it's not terms that, like, I don't know, an economic advisor is willing to deal with or able to deal with or has the vocabulary. So see, if one, do you agree with the premise that fundamentals have now greatly outpaced adoption and price appreciation? And two, what are you looking for? What would indicate to you that we're seeing some alignment there, or that we're seeing the sea change?
That's a lot of questions.
Yeah.
Pick any.
One thing for me that just seeing maturity in the ecosystem, I actually I guess I'm big on contrarian viewpoints, I think, tonight. But I actually, one area where the ecosystem has evolved and matured tremendously is actually on the financial derivatives sort of marketplace. So even in 2017, if you look back to 2017, it was very difficult to short Bitcoin. It was very difficult to bet against Bitcoin, like in any sort of like size capacity. And I think it's really healthy to have that just from a efficient market theory standpoint. It's really healthy to like have that short side of the market that is at least an option for people, so that you sort of have this wisdom of crowds effect where the price that things are trading at is kind of like the intersection of supply and demand. I think one of the big reasons you saw sort of like these gaps upward was that like there weren't great ways to sort of bet against the market. So it was only like, okay, like the only reason the market's going to go down is because people that own Bitcoin are going to sell or like liquidate to cash, but there's no real like people that are going to make money from betting against it. And I think to me that that ecosystem has really like developed and gotten really rich over the last 3 years. And to me that where we're at right now with all of that, it gives me a lot more confidence that like we're at like $10,000, $11,000, and like that's like I feel like it's like a confident stepping point. Like I feel like there's a lot more like depth behind that price, as opposed to when we were at like after we crossed $10,000, I think in like whenever it was, end of November 2017 or whatever, I was kind of like, oh, this like feels kind of toppy. Like it doesn't feel like this kind of feels just like a madness that's like unfolding. But I don't know. That's just kind of my 2 cents on the matter.
I have a question kind of around this topic for everyone, and I'm sure that a lot of you have seen some of the grayscale figures coming out about the quantity of Bitcoin that they're buying. And a lot of the theories there are, we saw that dip in hash rate and then we saw it spike. And some of those theories were, if miners at one point were not needing to sell their entire, Bitcoin supply, like all of the Bitcoin that they were mining to fund their operating costs, at that point in time, they were doing so in order to upgrade their equipment. So that they could stay more competitive in the marketplace. And, it was a matter of getting that equipment in the door. And then you saw the hash rate kind of go back up. I'd be curious to hear what your thoughts are, if you're allowed to share them, kind of just around that, purchasing new equipment or like post halving, and like, what the sell side pressure is looking like these days.
I don't think that theory is right, because most of the purchasing decisions, they need to be kind of made months ahead of time. It's not like
that's what I would think.
Theory.
So I was just curious.
Yeah, it's kind of like there's significant lead time on most of these things. Anyone that's purchasing at a meaningful scale. So I don't think it's like whatever. Yeah.
Well, the one thing that gets around that is buying secondhand equipment. So I think when the S9s became profitable again, people were trying to scoop those up and rack them up. And then by the time they got them in, price dipped a bit, but I think they kept on mining. But you can always amp up quickly from secondary used equipment, but it's not a large amount. It's not going to be that significant.
Yeah, not a large amount. And like with the, disruptions in supply chains these days, I just thought it was really interesting that was their underlying theory there. So
Yeah,
actually, I've been thinking.
Does
Sorry.
anybody have like a good reading of what percentage of the market is like 8 nanometers or lower?
65%.
65.
60.
It's pretty big. Everyone's using 8 now. So going back to some of our war think
What have
tank
actually
stuff.
gotten behind? Oh, go ahead. Sorry.
Oh.
Love talking about more. Let's do it.
There's I thought of a case where a nation state would want a 50% attack. And that would be in a transaction with another nation state that they're at war with.
Mm-hmm.
Oh,
Transaction
nice.
censorship.
Yeah. Or an ally of a state that they're at war with. They would double spend that transaction.
Harry, the value of your hash rate, you would be a rich man.
Yeah.
The value of that
Not just
hash rate
me.
would be incredibly high.
Listen.
Not to mention
Don't
they got to
take my
get
farm. Don't take my farm.
But
They have to get
I
what
feel like
6 comps behind that.
is that bad for Bitcoin though?
No, I think it's good for Bitcoin.
Everything.
That would you wouldn't be able to. I mean, if there were a hash rate marketplace, which is kind of what I think Nick is alluding to there. Like if there's a hash rate marketplace, in the event of like whatever, if one nation state is paying another nation state a large settlement for a war that's going on or something, I don't think that either of those two nation states would allow hash rate to be purchased by anyone outside of their own sort of nation, right? I don't know. Maybe not.
Maybe.
Maybe
If
they
hash
shall-
rate illegal, is Bitcoin illegal? These are all very philosophical questions there.
Peter from the chat says nothing is bad for Bitcoin.
It's true.
It's
That's
true.
true.
I feel like I have to keep telling myself that's not so and bet against that because it's just I'm so biased towards that mentality.
I
Honey
think that
badger.
it's hard too, like when you're talking to someone that's new to the space, because like that's just like the biggest question mark that they have in their mind right now is like, what if a government bets against Bitcoin? What if a government bans Bitcoin, quote, bans Bitcoin? Obviously in the States it'd be different. It'd just be the on and off ramps. But like, what does that look like? What if you're at war and, all those scenarios are just really, really difficult to wrap your head around. Like we've spent an hour and a half talking about this, and how many years have we all collectively been in the space now?
Mm-hmm.
So
I'm way more worried about like 0-day attacks or inflation bugs.
Yeah.
Like those scare the shit out of me much more than like if you told me that like China was making it their top priority to shut down Bitcoin or America or pick your superpower or your large power, like way less scary than an inflation bug or a 0-day to me.
Yeah,
I agree.
The risk, the upgrade coming up is actually fairly risky. The one that introduces Schnorr signatures and Taproot. That's some pretty complex, mathematical work that's being done. And I know the guys that are working on it. The Peters and the Bitcoin Core team there's nobody in the world better to do it. But if they get it wrong, and you're able to crack those signatures in some way, or in some way spend coins that aren't yours, that's a technical black swan event that could crush the Bitcoin blockchain. And I think in that case you would have to do like an Ethereum Classic type fork, right, to go back to pre Schnorr, right, something like that.
That wasn't a show, by the way. What you did earlier was a show where you said there's promising coins, but that wasn't a show. You can mention another coin.
Okay. Anyway, but I mean, I think in that case, you would have to go back to some sort of, you would have to do something like that. And then you have Bitcoin and Bitcoin Classic and just a real mess. But anyway, that's a black swan event that could ultimately ultimately Bitcoin would survive that. But it is, again, that's a black swan event that could cause a really big disruption.
Yeah, but I don't think we need to even go there. We just call Charlie Lee. That's why he's here, right?
Why? What did we call Charlie Lee for? So he could dump all his Litecoin on us?
Let Litecoin
no.
implement it first.
Yeah.
Testnet.
I guess that's true. Yeah, they've got it. So is it worth it to wait for it to, I would, if I could crack Schnorr, I would wait for it to be rolled out on Bitcoin. I wouldn't waste that on Litecoin. But I can't crack Schnorr.
I mean, if you can get what, like a couple 100 million out of hacking Litecoin, you know, that's a pretty big bounty.
I could get a couple 100 billion out of Bitcoin.
Yeah, but let's be realistic. You'd probably have an easier time getting something out of Ethereum.
But yeah, I at this point, I don't think there's anything that's going to stop the Bitcoin machine. It's just what are the hurdles along the way.
Who has another topic?
Austin, you've been quiet down there. Do you have a topic you want to bring up?
No, I'm just listening. I like the Three Gorges Dam one. Yeah, that's pretty much it. And the other thing was the site suitability index for like what your MCE looks like for site selection. And Harry answered that pretty well. So,
but there's more criteria. Like we can always go back to the well there. Like right. Yeah, we care about power cost. Yeah, we care about defensibility and duration. But there's like other stupid stuff. Like I don't want to have to drive more than an hour and a half between sites.
Right.
And I don't want to have to, you know, like there are sort of like bricks and sticks problems of like, you know, do I actually have the talent to get there? Like, can I get good enough fiber? Do I have to use a stupid sat phone? Like there's a lot of like stuff that's not a big line item on the cost side, but could be a big line item on the headache side. And so, you know, trying to optimize not only around kind of like what my spreadsheet tells me is right, but also around like what a 6 months into operations will also feel right. And we're working to continue to develop that, but you know, it's still, you know, it's 80% science, 20% art still.
Yeah.
Talent, like who's going to actually repair things? Who do you trust to pull things off the rack and put them back on? Like, you know, these are human problems. These are not Bitcoin problems.
I think specifically in like the natural gas field, I know Chase, you guys operate pretty close to us up in North Dakota. Like having a loop crew that goes around and can like service not only your gen sets, but then the machines as well. That's plenty into like what sites you're picking or what producers or what midstream companies you decide to go after. A lot of that goes into play too. So
hey Austin, would you or Chase mind giving us like the 2-paragraph version of like what's the variability between flared gas sites? Like how big can they be, and like what are the power cost ranges, and like what kind of talent does it take to make it run good, and like what are like the 3 key components of the site? You don't have to answer all of it, just like for someone who like, I buy utility power right now. We've looked at some of these deals, but we haven't pulled the trigger. Like what don't I know?
It's a huge egg. Chase, you want to go first? You want to go?
Go for it. Yeah.
So a couple of things, like term from the producer or the midstream company is important. Also the MCF that they're willing to deliver over that term. But then also like all of your operations depend on them being able to keep that well pad up and running. So like if they have a process component go down and they shut in, you're out of gas literally for like days at a time potentially. Usually that doesn't happen. Like we vet some of our operators and some of those production teams pretty decently. But I think like the gas that you can get, the gas content has a lot to play. Like whether you're working with a company like Mesa or Moser or some of the other like genset lease companies, or whether you're buying like Waukesha's or larger units, gas content has a lot to do with it, because you can have heavy methane, heavy H2S that needs to be like conditioned before it can go into your gensets where it kills your headers. Some of them give you flare gas for free, some of them don't. It just depends like what the well gas prices look like. And if you're tied into a grid, your cost for your gen sets, depending on like what the useful life is, you can amortize them over 40,000 hours, 80,000 hours for some, doesn't matter. And you can get the range that you're paying for electricity pretty decently down. I'd say like in the 2 cent range is doable. Potentially lower if you're doing like other things to the gas. And then like, yeah, your gen sets and keeping them oiled and keeping them up and running and keeping like parts working on the generators and making sure like your electrical distribution system's balanced across the different phases so that you're not like hitting that, 10% threshold where your breaker's just going to trip on the gen set. There's a lot of operational complexity to it. I think that's why there's a couple companies like Chase and like GAM and like I think there's another one called like Upstream Digital, maybe.
Upstream Data.
Or well, yeah, that's Steve's up in Canada. He does like smaller mom and popper type stuff, like smaller deployments, 50 kilowatts, 150 kilowatts. But some folks like what Crusoe's doing, like what we're doing, we drop a 1 or 2 megawatt container on site and start sucking down gas, right? There's some operational complexities there. That's for sure. And so what I think I missed maybe 1 or 2 things on your bullet list, or
how big or small can it be? Like, do you do a 10 megawatt site? I don't know.
There's a decline curve. Yeah. Yeah. Chase, go ahead.
I thought you did a great job of describing it, Austin. I think, site selection is a big component of what we sort of focus on in order to be successful. When we were first getting started, we were kind of like, we'll just partner with anyone that's willing to kind of like have us and give us gas for free. And then, pretty quickly realized that there's, certain site reliability things that can cause interruptions. And, you're sort of at the whim of the producers, how efficient the producer is kind of, impact your overall runtime and your ability to sort of execute. So, that's been a big focus for us. Generally, the bigger you get, the more efficient you get, the cheaper your net power price is. The site size, I mean, the smallest we've ever done was like a 300 kilowatt size, and then the biggest, there's big sites. I mean, tens of megawatts kind of size that you can kind of get to, and it sort of depends on kind of what you're looking at. Conventional versus unconventional too is like another aspect. Conventional is kind of or unconventional is like, what you have mostly in this sort of US onshore market, where, people are fracking and doing these big horizontal wells. The decline curves on those are generally more rapid. And, the production is more spread out, but, if there's sites with millions of cubic feet a day that are at a single location, that's tens of megawatts. So,
that's awesome. No, this is all super interesting to me. Is like we both mine Bitcoin, but we do it so radically differently that it's just awesome.
Yeah, but I do echo Austin's sentiment though. It is an operationally complex way to do it. Just the staff that we've had to and just kind of the bridge we've built kind of between a really talented group of software engineers that are building mining optimization software. Miner management software, optimization functions that are integrating with all these sort of IoT devices, sensors, gas stream information, that whole aspect to our business. And then we have like all this, this group of field hands, this super talented group of rotating equipment technicians that are, taking care of our power generation equipment, making sure it's running, making sure it's, running effectively, smoothly, preventing future hiccups or interruptions. Really talented group of electricians that we've sort of put together, making sure. And the other interesting thing is that you're in the middle of nowhere, but the oil and gas industry is a highly regulated industry. So we're not, we're not like it's tough to operate. I think certain crypto groups kind of will cut corners on certain things to save a buck on certain things, and your expectation is that your stuff is going to get inspected. You're going to have state electrical inspectors come by your things and really make sure all the components are UL listed or OSHA compliant, and everything's kind of up to standard. So it's kind of a operational barrier to really make sure everything is of the highest quality and standard.
Do you guys remember the ant box?
Yeah.
Yeah,
Yeah.
those don't work in the oil field.
I don't know, but they were barred from import for some time because they were catching fire, or it was an electrical hazard. I forgot which one it was, but
They have a UL listed version.
I would not plug one of those in for. There's no way.
I know.
We have like investors all the time, or like some of these VC firms. They're like, oh, your cost to build a box, like stand up a box, is this much. Like, what about these amp boxes?
they're so cheap.
Yeah, they're so cheap. Like, you really don't get it. It's yeah, I think for a while when they're banned for import, there was still a guy that was down in Atlanta who was importing them.
That's what I was thinking. Yeah.
Deconstructed, and then he would reconstruct them when they got on site. And so, look, I enjoy building things the right way. Like for all of our deployments, like I build the PDUs from scratch. And also write the software for them because there wasn't anything that was like 277 VAC rated. And so I think Chase kind of hit the nail on the head there. It's a different operating environment, and with that comes a little bit more risk. And so,
yeah, I mean, we feel that way on even just doing we do the containerized solutions, but we fabricate tons of stuff ourselves and said like I just don't trust what's on the market, or there's not a cost-effective option for us. And so we said, screw it.
Right.
We're just going to go out and figure it out. And we've been lucky enough to have, talented, creative people who just like solve crazy mechanical engineering problems that I don't understand.
Right.
How long do you think the mining environment is going to be like this? It sounds like it's very DIY right now still. Like you still have to get in there, figure it out, make it work for whatever you're doing it. Like when is it going to become more of like a plug and play where like bigger players can just like, stamp of approve, like we're going to mine now?
I don't know if it does, because like the race in mining, first of all, like if you read any of what Luke Dash Jr. puts out there, like we're all racing towards like 0% margin profit, right? Like the race towards mining is 100% towards the cheapest electricity. Especially as hardware becomes more commoditized, but you still have there's a massive difference between operating off of hydropower in like upstate New York versus operating in West Texas, right? And like, it's just, I don't think there's ever going to be like a one size fits all solution to this. And I think that's where a lot of like the competitive advantage comes. Like there's always ways to make it better. That's just my 2 cents.
Yeah. So we do our own containers too at Blockstream, and I think it's a good thing. Everyone has their own solution and they can optimize their own. It's part of that, self-sovereign take on Bitcoin. Right. It applies to mining too. And there are so many different ways you can mine Bitcoin. There's never going to be a one, what's that phrase again? One fits all.
One size
fits all. Sorry. There's never going to be that. So it's always going to be custom. Even at enterprise scale levels, like different locations are still going to have different requirements. So it's difficult to have just one size fits all.
Yeah, I think like a great example of this might be like recently we retrofitted a container that I had, and we had to like weld in place this VBank filter solution on the interior of the container because the previous build, it just didn't work for the exterior. And it was a game of inches whether I could swing open the panel door and like miss the supporting upright on the actual VBank construction. And so like what Chase talked about earlier, especially in the oil field, you might have a well pad that's producing 150 MCF per usable gas, and you have to scale your containerized solution to fit the available like generation capacity supply. And so, yeah, definitely no one size fits all. It's a challenge. It's fun though.
If you wanted to even abstract this out a little bit, ultimately what Bitcoin mining is it's this converting energy and like, potential energy into consensus like mechanism. And there's so many different ways that you can end up doing that just from a really far out sort of logical way of thinking about it, it'll never be one size fits all because there's too many ways to go from, potential energy into some sort of, in this case, electrical output. Who knows what this could look like in the long-term future, but it feels like it's impossible.
Yeah. And also, when we get to the point of war, then it's who can have the best camo on their containers. So we'll see if Harry's got the better camo, or if Blockstream has like a optical camouflage where they're transparent.
Well, you have the satellites already, so you can test your solution better than.
I just want drone sentries mounted up top. That's what I want.
All right, guys, this has been a really, really fun discussion. We've hit the 2-hour mark. I think it's time for last word. So we're going to go one by one, and each person can kind of have their last moment to give a message to the audience, talk about anything they want. It could be about the subject matter that we've been talking about or something else. So let's start off with Nick. Nick, why don't you start with your last word for the audience?
Yeah, certainly. Thanks. I don't think there's not much to it. Bitcoin can't be stopped. Bitcoin mining is here to stay. It's just how's it going to look throughout the future? And I think I think that's really what we're all trying to figure out here on this call is what is the next decade of Bitcoin mining going to look like? And that's my final word.
Cool. Let's go, Chase.
My final word is that Bitcoin mining is such an interesting application for converting energy into monetizing, stranded energy, and I think it's the first stepping stone into a future of decentralized cloud services, in addition to a decentralized financial ecosystem.
Awesome. Very bullish, in my opinion. Let's go to Samson. Why don't you give us your last word? You're muted.
I'm muted.
I'll keep it short. I have to drop off after this. So I'll just say, remember the UASF.
Bitcoin Independence Day on Saturday. Cheers, Samson. Cassie, why don't you give us your last word?
Yeah, I will just say that, if I wasn't already bullish before this call, I'm certainly bullish after this call. It's cool to hear everyone else's thoughts. And I really enjoyed talking about war for nearly an hour and listening to everyone speak on that. That's very exciting. That with, the context of, the visa support and strike and OCC decision and, PayPal and Venmo, I think that this is a super, super exciting time to be living in. And also a, I guess really, really sad and disheartening time to be living in. So it's an interesting juxtaposition there, but in the global macro.
Lots of adversarial thinking on this show. This is definitely a panel to remember. So thank you guys for the conversation. Let's go to Austin and then Harry to close it out. And yeah, thanks again for everyone for giving us your evening. This was a lot of fun.
So I think that Bitcoin mining is obviously here to stay for a very long time. In the United States, particularly, it is a matter of national security. But if you're interested in kind of like forecasting out how the generation happens, like on a long timeline, read some of Vaclav Smil's natural gas fuel for the 21st century, or his like power density. Like it's the best book that I've ever read that gives you like a really good framework around how natural gas works, both globally and in the United States. And then like the only thing that I need, or I think the industry needs, is like more research and development in like better generation. Because like Chase said, it's great to turn chemical energy into mechanical energy, but at the end of the day, we still do it like very inefficiently. We need more people to enter the space who can do that.
Awesome.
Wait, what was the book again? Sorry, I just took a note.
Vaclav Smil's either power density or natural gas fuel for the 21st century. Yeah.
Got it.
Harry.
I got one optimistic, one pessimistic final thought. The time to have a plan is now. The clock is running short. If you are not making incremental progress on a daily basis, you are losing ground. And taking kind of that sense of urgency into the future is going to be one of the best gifts you can give your future self. And then the other piece of it is I've never been more confident in the tools that we've built for each other. Whether that's us confirming transactions, whether that's developers improving the protocol, whether that's users transacting peer to peer, or if it's outside of Bitcoin, whether it's Tor or privacy or other. We've never been better than we are today at playing defense against the offense that is the creep of the Cantillon effect and the creep of the surveillance state.
Amen. Amen to that. Hashtag Bitcoin, and I'll drink to that. Cheers, guys.
Cheers.
Cheers.
All right, guys.
everyone.
If you like this content, make sure to subscribe. Make sure to smash that like button. Thank you to everyone else who's left on the show. This was a lot of fun, like I said. And go to Bitcoin 2021.